Hey y'all. Y'all probably like, she came in boring. Hey y'all, welcome to another episode of Talks with the Tax Cop. I am none other than yours truly, Patrice Elberry, EA, aka the Tax Cop herself. This is our first episode in February of 2024. We are in season 3, episode 4. And we are so glad that you tuned in with us this week. If this is your first time tuning in, welcome. Welcome. If you are a repeat offender and are back listening to another episode, we appreciate you. Definitely reach out to us. Let us know what topics you want to talk about. If there's anybody in particular that you think we should reach out to for an interview, please let us know that, because we want to be able to be bringing you topics that you want to hear, information you want to know about. And if you want to hear from me on a weekly basis besides the podcast and you want me to come directly into your email box, reach out to us. We send out a weekly video email to all our people that are our subscribers to let them know like little tips and tricks of things that we are doing, working in our firm particularly, and certain topics that people come and ask us for. So it'll come directly to your mailbox. You won't have to be like, did I download the podcast this week? Did I miss it? You'll get a little snippet, no more than anywhere from 5 to 10 minutes in your mailbox of us talking about a particular topic. All right. So this week it's the week before the Super Bowl, right? And so, yeah, I'm not a football fan at all. I am 1,000% a basketball fanatic. I am not a football fan. No shade to the people that play football, okay? But it's just not my thing. I will watch it from time to time. Thank God my husband is really just in the WWE, y'all, because I am a wrestling fan, right? And a basketball fan, but not really big on football. And so I'm not like, oh, I don't have to host no big old event or anything like that, or I'm not forced to go to any Super Bowl party, even though I like a good Super Bowl party for the snacks. But I will tell you that I cannot wait until this Sunday for the halftime show, the Apple Music halftime show. Y'all, I don't even know what adjective to describe what kind of fan I am of Usher Raymond's, okay? Back in the day, even though I was dating my husband and, I might have had him as a screensaver on the phone, I lie to y'all not. That 8701 cover was my screensaver at my government job. Like, with his shirt off, everything. Usher was my straight screensaver on my government computer. Yes, he was. And then when I became a supervisor and I had my own office, and if I really needed to go into a zone, I would be playing a playlist with Usher on it. I definitely would. It would get me through them last couple of hours. You would think I was in there having a concert, like I saw Usher myself. I would be in there late in the evening, and I might have the thing up like I was at an Usher concert. Never been to an Usher concert, never seen him perform in person, but I have watched videos of his concerts, his tiny decks when he came to NPR. Just a huge Usher fan. So I definitely will be glued to the TV at the halftime screaming like I actually am at a Usher Raymond concert. Like I went to Las Vegas, okay? Like I was actually at his residency. That's how I'm gonna be in there acting slam crazy in my living room. So I'm definitely looking forward to that part of what's happening this Sunday. Who knows? Maybe my theme music for the week while I'm in here as we are moving through the tax season and getting things straight will be my Usher playlist, because I got a bomb one. Anybody who's ever taken a fitness class with me too know that when I was doing essentials, like Apple Essentials, when I was first like heavy into Apple Essentials and using them as my playlist for classes, anybody who was at JBAB, y'all know. JBAB, y'all know. My Usher Essentials, honey, you couldn't tell me. You couldn't tell me I want a backup dancer for Usher Raymond, okay? I need to go find that playlist and play the heck out of that joint. I'm so excited. So excited. Y'all see, I got anybody who's looking, y'all, I got all my yellow on. My hair's tied up in a ponytail with my yellow scarf. I gotta do my head scarf. It's Black History Month. And I'm lazy and it's wintertime. Until I go do some stuff. And I need to give myself some glow. I don't feel like I'm as glowy. It might be my light and the sun and how everything is doing, but we're bright today. Bright, bright, bright. And we will be making some adjustments in the background slightly. I told y'all, my husband can't stand my background. I like my background. It is reflective of truly who I am, but I do need to adjust it so that you all can actually see my photo in the background, my painting that where y'all used to see it, right? My big, beautiful Winnie Weston painting. Shout out to Winnie Weston and her being featured, her Justine's stuff being featured at Target for Black History Month. I'm going to continue to shout her out. I am so freaking proud of her. Absolutely love her stuff. I wear her sweatshirts, wear her t-shirts, and have paintings, drawings that she's done, prints in my home. So definitely she's my client, and it has nothing to do with just my client. It's just her talent. Just beautiful, beautiful, beautiful. She's a beautiful person, and I'm so happy for her being featured in Target. And I went to my local Target, and honey, it was not there. So I'm gonna have to go online to even support that way, because she has some beautiful, beautiful things out there. So y'all check out your local Target. Check out Target.com. Winnie Weston. Y'all get the stuff. All right. This week's podcast is sponsored by none other than yours. We are going back to a traditional podcast. I want to go through, and this week we are going to talk about, drum roll please. Y'all know I'm going back to my favorite, right? The Bradford Tax Institute. Y'all, and I have a whole stream deck here and need to just play let's see. Let's let me see what my sound sound like. There you go. That was the wrong drum roll. That was absolutely, I'm gonna do it again though. That was wrong drum roll, but I'm gonna give me a good one and we gonna use it in here so that we can do what we need to do. Y'all like, Patrice, just use everything you got. Really, just use everything you got. All right, so I'm gonna jump in directly into audit and awe, because if y'all don't do these 12, if y'all end up doing any of this stuff on a dirty dozen, come on, you asking for an audit. So let's go into audit and awe, y'all. All righty. So hopefully y'all can see Bradford Tax Institute. They're I'm gonna make it just a tad bit bigger for y'all so we can all see it. There we go. Fill the screen. Let's talk about it. The IRS Dirty Dozen list for 2023 tax season. All right. So for 20 years, the IRS has released, I told y'all the IRS, a gentleman, the IRS has released a series of notices identifying tax scams and avoidance schemes, which the agency calls the Dirty Dozen. So this comes out all the time, and I'm not going to lie, we always look for this. Even when I was an auditor at the Department of Defense, like we would know what the secretaries, like things that the secretary is concerned about. This happens almost in any federal agency. Like, hey, what's their concerns? And we would go and build audits around these topics. So therefore, we're going to use the IRS Dirty Dozen to let y'all know. Is the IRS Dirty Dozen just an IRS publicity gimmick? Or is it useful for taxpayers, tax preparers, and tax advisors? It's not a gimmick, y'all. It lets us know what is on their radar, what they are coming for, what is their low-hanging fruit, so that way you don't be making these silly mistakes for freaking no reason. None. All right, so let's get into it. Let's talk about what they are. Let me get on here with y'all. Oh, I got the wrong screen. Which camera do I want? Show. I have to unlock it. I thought forget that. Y'all just gonna hear me. Y'all just gonna hear me. Let me unlock it. Let's try it again. I want the right. Where's the camera? This is the camera I want y'all to see. Okay. Okay. I want y'all to see me. Anyway, we'll go back and forth between the two of us. Just the two of us. Don't pay me no mind. When I be thinking my stuff is together, I'll be flipping back and forth so y'all can see. All right. First one is the employee retention credit claims. These are aggressive pitches from promoters to con ineligible employers into claiming the employee retention tax credit. Promotions can be based on inaccurate information related to eligibility for and computation of the credit. All right. So, y'all, let's talk about it. Let's really talk about these ERC claims. If you're getting those telephone calls that come, I'm not getting them as much as I used to, but that would come, I would get like 2 or 3 a day that come and say you could get up to $26,000 back per employee, whether you had a business or not. I have a business that has employees, but of course, I just be like, please stop calling me. Like, dude, but I also understood what the ERC is. The ERC still is available for a short period of time. We've had the employee retention credit for, like, it's part of the code. But how it was from when we were in the panini, COVID, right? From 2020, where they had different rules and obligations and regulations, that is closing out soon. And so they put a halt to it at the IRS, but now there are still people, because the time clock is ticking for you all to be able to submit. And I only have a few clients that even fell into this category, but everyone was reaching out. Hey, I can do this because such and such qualified and such and such qualified. And this company helped them. Why can't they help? Why are you telling me I don't qualify? And so it wasn't a free for all. That's what I want to make sure. It wasn't a free for all. Just because you had a business, just because you were paying people, did not mean that you got this. Or just because you were making up stuff and saying that you pay people, it did not make it true. There were rules and regulations, right, that made it so that you apply for employee retention credit. And at first, when it came out, it was a conflict with the PPP and all these other things, right? So you need to make sure that if you do qualify for it, we go ahead and submit and make all the amendments to the payroll records and the tax returns, etc. Now, let me explain what this employee retention credit actually allows. It's a credit, right? Which means it's tied to payroll. It's an adjustment. So it's not free money. And so people will say, I don't want to say everyone, people will say, oh, you get this money back up to that's up to $26,000 per employee per quarter based on if you met the qualifications. And so it was not a guaranteed 26,000. It is up to, because that's what the criteria says, if you do meet the criteria. So I want y'all to keep that in mind. If it sound crazy and somebody gonna promise and you like, oh, okay, and y'all have to give them numbers. You have to give them financials. You have to give them payroll reports. And if it's a company, like a payroll company or something like that you've never worked with before, and they're like, okay, I'm just gonna take your stuff as golden, I just want you to keep in mind, they froze this for a while, and they froze it because there was a lot of fraud in this space, because it was people that were closing down their businesses and all they were doing was employee retention credits because they were getting a percentage. Like whoever prepared the packet was getting a percentage on top of whatever you got, but the money had to come to you first. And was it lucrative? I'm not gonna lie to you. It's lucrative, but it's so much more lucrative if you actually qualify and can get it. Because if you can't, y'all, this on their dirty dozen. They are giving people a grace period right now to come and tell the truth about what's really happening. Did they falsely apply? You know what I'm saying? So you don't want to be caught up in some stuff like that, thinking you was doing something, and now you get yourself in a whole big mess, and now you got to go work with an enrolled agent like yours truly unnecessarily to get some stuff straight that could have been avoided in the first place, especially if you had known. So it wasn't for everyone. All right, let's look at the next one. Let's go back. Phishing and smishing. That sounds like it should be a whole thing by itself. These are fake communications from scammers posing as IRS agents or other tax or financial community members. These messages arrive as unsolicited texts. Smishing. I didn't know what that was called, y'all. Smishing. I didn't know we had a whole term for it, because I get a whole bunch of unsolicited texts dealing with financial stuff, right? Smishing or email phishing, which I'm familiar with, to lure unsuspecting victims into providing valuable personal and financial information that can lead to identity theft. All right, so now let's talk about it. Let's really get into it, okay? The IRS not gonna send you no text, and they're not gonna email you asking you for any of your financial information. They will send you a letter. Uh, I'm not gonna tell you they don't call. I'm not gonna tell you they don't call, right? Uh, and the reason why I'm not gonna tell you they don't call is because now on the when you call, you can, if you place in line, they may call you back. But if you didn't get in line and give them their information for them to call you and they randomly calling you, they not it's not gonna happen. Y'all, it's not gonna happen. If there's something wrong with your anything dealing with the IRS or even your state comptroller, they gonna send you a letter. And they gonna either send you a letter via regular mail, you're gonna get something via certified mail, unless, and yes, they did beef up their people. Unless a revenue agent or officer show up at your door, it's going to be via mail. And you're gonna know because it's gonna have them 3 letters at the top for IRS. They're not gonna just be randomly calling you on a call line. Like we call into the call center. They not calling out to us. Like at a like when your credit card company call you or your mortgage company call you. They don't sit around have a call tier and be like, hey, your amount is, they don't do that. Why? I can tell you as somebody who has to call the practitioner priority line quite often for clients, we have to validate who we are. They got to make sure, and any of you who've had to call because you got a letter saying, hey, you're not going to get your refund until somebody clears it up. You had to validate you were who you were. Address, name, social security. If somebody send you this, and please share this with your youth, please share this with your elderly people, like, because I know you get panicking. Oh my gosh, the IRS sent me a text. Please don't answer that. Or see an email. Please don't answer it. Delete it, report it, but don't answer it. Do not give up any of your personally identifiable information, your PII, to anyone without reaching out. And you may be on hold to reach out and be like, hey, did anybody send me any correspondence? Because the line you call into be like, no, you didn't get any correspondence. Or if you have a relationship with a practitioner and they can actually monitor your account. Like I have some clients that I monitor their transcripts. I can see if a notice came out. I can tell them. I've had clients say, hey, you should have a notice coming about this day. Or, hey, I got a notice because I'm power of attorney on your account as well. And I got a copy of the same notice that you should have got. Did you get it? Here's a copy of it. And then I give that to my clients in a secure portal. Like I'm not emailing this joint to them. It is in their secure portal. All right. So and for those of you who do not have an IRS account, IRS.gov account, and a lot of these states are starting to do the same thing, have portals, they will send you notifications directly into your secure portal with them. Okay, so your IRS.gov account, you will start to get notices there. They have QR codes on them, you can scan them, etc. So please, please, please use all the mechanisms that are behind a firewall, a secure firewall. But pay attention because, of course, people are phishing and spamming and doing all this kind of stuff. Make sure you are accurately at the IRS or your state comptroller's website because these people are out here trying to take your identity and we do not want that to happen. Okay? All righty. Number 3, online account help from third-party scammers. Swindlers pose as a helpful third party and offer to help create a taxpayer's IRS online account at irs.gov. They then try to steal a taxpayer's personal information. I need y'all to see my face. What? IRS.gov is free. Why would anybody be offering to help third party? Don't accept that. Don't accept it. Do not get nobody to. It's irs.gov, and signing up for your account is easy. Now, it may take a while. They might mail you something to verify that you are who you say you are because you couldn't get in. But please, please don't get no help in setting up your irs.gov account or your state comp. Don't do that. Do not do that. Oh my gosh. Don't. And tell your youth and tell your elderly people, I know we busy. I know we busy, but if you get something like that, now I haven't seen these third party scammers or gotten any correspondence, but I didn't even know this was a thing. This is crazy. Don't be that busy that you would work with somebody. And obviously it's on the dirty dozen because somebody has actually um worked with a third party to do this. And now they're reporting it and like stuff happened. Don't do that. I've heard some things where people have done that with their retirement and things like that. And then they paid them and they were supposed to do stuff with. Don't do this. And then they lost their entire retirement and now the taxpayer on the hook and their retirement gone. Like don't do this. Do not. Don't no third party nobody. No, go do it yourself. Please, please, please. I admonish you. Please go do this yourself. Please. All right. Number 4. False fuel tax credits. Woo! They getting people. The fuel tax credit is meant for off-highway business and farming use and is unavailable to most taxpayers. But unscrupulous tax return preparers and promoters inflate taxpayer refunds by improperly claiming the credit. Hello? I mean, anybody can see my face on this one. Can you believe why? This is why I make my clients fill out a detailed organizer. This is exactly why. We are not going to be claiming stuff that don't rightfully belong to you. And we're going to have record that you told us that this was this, and I'm going to ask for the support. We are not doing this. To inflate refunds? Why? Why? The whole purpose of taxes is to report what happened in the previous year, and the goal is to break even. Now, break even for different preparers is different. For me, I tell my clients all the time, break even is you either owe $1,000 or less, or you're getting a refund back of $1,000 or less. And the reason why I say this is because you can get your hands on $1,000 a lot quicker than if it's more than $1,000. And I say for a refund is because that means you got most of your money throughout the year. And Uncle Sam and her sister State gonna only owe you a small, give you your money back because they borrow it interest free. The goal of taxes is to break even. You want to, okay, this is what happened. My girlfriend, Miranda Harper from HBS said it's a reconciliation, right? I say it's reporting what happened in the previous year. The money went out, the money went and did whatever. You either had with taxes withheld, you either paid some estimated taxes, whatever, right? Because it is, taxes is a voluntary system based off of the information you telling your employer or you giving up to the IRS based off of your estimated taxes. But that's it. The goal is to break even, not to have astronomical refunds. That is not the goal. Because why? You can have that money throughout the year and do what you want with it. And we're not going to be telling lies for the sake of telling lies. That's crazy. Crazy. Because you get left, like y'all be looking for the bag, you're going to be left holding the bag for no reason. No reason. All right. And this next one goes right along with it. Fake charities. Scammers set up fake charities and seek financial and personal information, which they then use to exploit victims through identity theft. Y'all protect yourself. And I understand us as tax advisors will be like, hey, you might can itemize if you donate to charities. You got to know your standard deduction amount. And you got to understand that itemized deduction is not a dollar for dollar deduction. It's only going to give you a percentage. So we either doing a standard deduction or we doing an itemized deduction. But go do some research. Just like you can go research whether or not I'm a registered tax preparer, which I am. Okay, my fingerprints on file at IRS. You can go look me up, right? You can go look me up and you'll see my credential and everything. On their website, I am registered. You can go do the same thing with charities. Go look this stuff up because I do not want people taking your information, right? Because first of all, everybody already selling our information out here in these streets anyway. We already know it. Websites, social media sites, everybody selling our stuff. I don't want you to be the one have given up your PII. Like, let's protect it. We gotta, like, technology is going nowhere. We have got to be better stewards of our information because our information worth money. on so many different levels. And you do not want to be held holding the bag for something you had no idea and no parts of. Now, if you did it knowing and you out here doing criminal activity, that's on you, boo. That's on you. But if you not, you don't want that headache. It's so much to clean up. So much to clean up for no reason. All right. Unscrupulous. I love that word. Unscrupulous tax return preparers. The IRS admits that most preparers provide outstanding and professional services. We do, right? Because we really just want to help people. But warns against the scammer preparers, especially ghost preparers, who prepare tax returns but refuse to sign them or include their IRS P10. Y'all look out for, I've said this. This is not the first time y'all have heard this. You will see it in our social media. It is going to come up. If you pay somebody, they should have a name on that return as a pay preparer, and they should have a P10. Period. Period. Point blank. Period. 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 It should happen. It should so happen. Don't be out here letting people get you. And if they did not sign, go back. And you gave them some money, go get their information. Go get their information. Go get their information. Don't file that thing. Go get their information. And pay attention, because I've had clients do this where then they go and look later and they be like, this ain't self-performed, but self-prepared, but I didn't prepare this. If they're not putting their name on it, go get your money back. Know who you dealing with in these tax streets. Because most of us are providing outstanding and professional services. Because this is really, if this is what we do, from the tax preparation to the tax resolution to helping you with account, if this is our livelihood, we want to do a good job. It ain't about scamming you. It's about making sure you understand and get what you're supposed to get. And answering your questions. Like, really, that's a lot of us out here want to do the right thing. It take a few bad apples to just make the whole industry look crazy. Okay? All right. Next one. Social media fraudulent from filing and bad advice. Let's dig into this. The IRS warns that inaccurate or misleading tax information on social media can involve standard tax documents such as Form W-2 and more obscure ones such as Form 8944, Prepare e-file hardship waiver request. Schemers use these forms to encourage people to submit false and accurate information in the hopes of getting a refund. Y'all know I'm on social media. I am not going to fault anybody. It's tons of us tax preparers, tax professionals on social media. Tons of us enrolled agents. Tons of us CPAs and accountants on social media giving out our message. But because we're on social media, we are low-hanging fruit for the IRS as well. We should not be giving out bad information. And if you are taking that information, I want to highly encourage you, right, to do a consult with the person that you are, whomever that person is that you are following and you are loving. Like, actually do a consult with them before you go out here. Because if it's wrong and you be like, the tax cop told me to do this, if they come and be like, oh, the tax cop and such say, I'd be like, based off of what? Do a consult. Really know what you're doing. And I'll give you this story. I've had somebody recently reach out to me. They did their taxes. They follow me. They've talked to me. They've done one-off consults. They reached out and said, hey, Patrice, I prepared my tax return with XYZ software. Can you look at it over for me? I said, no, I cannot. The reason why is because I ain't prepared a return. You prepared a return. And I don't use that software like that. I don't use the software like that. And they have preparers that you can reach. That software got preparers that you can reach out to. So my advice was reach out to the avenue that they have provided and talk to one of their professionals that are working with them to see if they can get your questions answered. Simple question, or do a one-off consult with me so I can explain to you what you need to do. But I advise, because you are using this software and you want to act like I did this stuff, and because if it go wrong, you're going to be like, you advised me to do this. No, ma'am. No, sir. No, sir. Right? I do make recommendations to clients as if you're gonna do it for yourself, and I tell people, hey, you really don't need me doing this. But if you do software, I recommend two softwares because I think they're very user friendly and not accounting heavy, and I know that they'll back you if something go on. I've used the professional version of both of these softwares. I don't back everybody's software, but I'm not going to give you advice on something that you did and you prepared yourself. And then when it go wrong, if you get a notice, you talking about it was me. No, we weren't in engagement. We were not in agreement. And you don't want to do a consult like that. That's not fair for me when that platform already had their own checks and balances. Use the checks and balances. Pay the extra to make sure because they just like my firm does. We have an audit protection plan. Pay for that. Pay for that. So that way, if anything go wrong in a couple years, or if something off, or something changes, you have somebody to reach out to that's going to help advocate on your behalf to get it fixed. That's why I offer it. Okay, that's truly why I offer it. All right. Next, next. Spear phishing is cybersecurity for tax professionals. Phishing emails or text messages are designed to get users to provide personal information. Spear phishing is a phishing attempt tailored to a specific organization or business. The IRS warns tax professionals about spear phishing attacks to steal clients' data and the taxpayer's identity, allowing a thief to file fraudulent returns. Y'all, this is big in our space, in our industry. And I can tell you, I've had some stuff come through that I've immediately, thank God I work with my IT team, and I'm like, boop, this look crazy. I immediately delete it. Who is the what? I've had it. I've had like just because and it's great. I'm grateful because I came from an environment where they would do exercises and stuff like that with us. Hey, we're trying to get this and we're trying to get access. And even in the trainings that I have taken at the end of last year and the beginning of this year that are reminding us, hey, certain things don't enter those items into the tax return until this point. Because if somebody were to hack into your stuff for whatever reason, they could take that information and then it would be hard to file the return. So I've learned some things and tips and tricks, right, that we have implemented in our return in our firm. My IT guy made sure we got the right kind of firewalls and things of that nature. I'm grateful that I went and worked with somebody to build that infrastructure, and then we also back up our stuff. But they are not lying about people sending emails and doing spear phishing and trying to do so much stuff. Because it's heavy, especially during tax season, which makes it easier for us to catch. But I get a lot of them off tax season. So like right now you'll see and you be like, whatever. Like that's evident because we're busy. And you like, wait a minute, I don't have a relationship with that person. That's why I don't do a lot of email, y'all. So anybody who's like, Patrice, why does she do? I don't. I'm not doing a whole lot of email. We're not keeping a whole lot of stuff. Like we working in our secure portal because of stuff like this. And because I've gone through and I have my cybersecurity plan and things of that nature, we have cybersecurity insurance. Like it's only going to get worse with people trying to hack into our stuff. And so this is real. And it definitely, I'm surprised it's so low on the Dirty Dozen because it's becoming more and more prevalent in my industry. Okay. I wonder how it really is like on the credit card side. Like what kind of like I'm not in that industry, so I wonder how it is there. And then like in the insurance industry, I'm curious as to how they are trained on stuff like this and how to keep it tight. All right, we got offer and compromise meals. Offer and compromise meals aggressively promote offers and compromise in misleading ways to people who don't meet the qualifications, which can cost a taxpayer thousands of dollars. Y'all go back to my episodes where I explain everybody don't qualify for offer and compromise. There's only 4 remedies and a possible. I'm gonna say 4 and a possible, and I've said this in my thing. As an enrolled agent, I'm gonna tell you. And yes, it's great to get you in the door, but everybody don't qualify for offer and compromise. And I want to encourage people. Let me take these glasses off so y'all can see me and see me well. I want to encourage people, and I did this in one of my podcasts, and I gave the link. I need y'all to go and see if you pre-qualify for an offering compromise on the IRS website before you call anybody. I know it sounds good. I know it's tight. I know it's uncomfortable. And I know you just want that debt off your back. I get it. As an enrolled agent who actually helps people with tax problems, and as someone who's had to stroke a 5-figure check to the IRS twice in her life, in her adult life, I know that's not a good feeling. I do. I know it's not a good feeling. Okay? I'm not going to lie to y'all. But this right here, these offering compromise mills, everybody don't qualify for offering compromise. So I would admonish you to go educate yourself before you go have a conversation with anybody that you've heard on a commercial over and over and over again. There are several ways to remedy the situation. Don't get mad if it's an offering compromise or nothing else. I want to pay pennies on the dollar. Yeah, you do. So do everybody else. So do everybody else. But you don't want anybody charging you for you to pay pennies on the dollar and then you don't get it. Then you be mad at us. I've had that happen with someone where we've gone through and at the time they qualified, at the time we submitted their packet, they qualified. I lie to you not. I've had some people, they qualified at the time we submitted. But because of the time frames we had and stuff slowed down at the IRS, by the time the IRS touched it, they did not qualify for the offering compromise. Because of the length of time it took for it to get processed. Had we gotten it processed and the times and I'm not talking to the 12 to 18 months, I'm talking it took longer than that. And the reason why it took longer than that, they came out of their situation. So you got to know what's going on at the time. You need to work with someone who understands this space, right? And who's going to tell you the truth. Who not just going to sell you on, yeah, you qualify. And so I would tell you to go into the meeting informed. Use the IRS pre-qualifier to determine whether or not you even qualify for offering compromise. And just because you don't qualify for offering compromise does not mean that you don't qualify for any other remedy. Okay? Because there's other ones that exist, but just don't go out here, oh, okay. And if you got a financial hardship, rightfully got a financial hardship, then y'all need to talk to somebody so somebody can help you get this thing resolved. Because financial hardships are real, especially in this day and age. Y'all see how these grocery prices be? Junk is crazy. It's crazy. All right? I'm going to put my glasses back on because I needed y'all to see my face. I'm in business. Okay? I don't feel like I don't want to feel like I'm lecturing y'all. I just want to make y'all see what's going on. Schemes aimed at high income filers. Charitable remainder annuity trust. This is a new one for me. These irrevocable trusts lets individuals donate assets to charity and draw annual income for life for a specified period. The promoters, advisors, and taxpayers sometimes misuse trust to eliminate ordinary income and capital gains on property sales and then monetize installment sales. Fee-based promoters facilitate a purported monetized installment sale to enable taxpayers to defer recognition of gain upon the sale of appreciated property. Okay. I get what they're saying. My high income filers, people will cater towards you because you got the money. And we know you don't want to pay a lot of taxes. But make sure that you qualify for this. Now, I have a few high income filers who are looking to lower their tax bill legally, right? And what we're doing is we are positioning them so that based on the tax code, they can leverage the existing loopholes that are legal. Not this right here, right? Y'all thinking, oh, that people not paying attention to it. They are. They looking at these charitable remainder annuity trusts. They got other stuff that they can put them in because there's actually you can do donated funds, right? You can do donations based off of donated funds, and those are legal all day. But the fact that y'all know that this is the way they are flagging people. If you in a certain tax bracket, and y'all know high income tax filers, who they looking at, right? My glasses dirty, y'all. Y'all pay attention to this. Don't get got. Make sure you. We know y'all don't want to pay taxes. We know y'all worked hard for the money, right? But so did the people who not making high income. They work hard for their money too. And if you get caught out there, make sure you working with somebody who can help you. Make sure you justify it right. That's all I'm gonna say on that one. Justify it, because we're gonna talk about more schemes. Okay, let's talk about the last two together. Last two: bogus tax avoidance strategies, micro captive insurance arrangements. A micro captive is an insurance company whose owners elect to be taxed on the captive's investment income only. Abusive micro captives lack many attributes of legitimate insurance. For example, they may insure implausible risks, fail to match genuine business needs, or unnecessarily duplicate the taxpayer's commercial coverages. Syndicated conservation easement. Y'all messing with the easements out here in the streets? Syndicated conservation easement. Certain fee-based promoters help taxpayers claim grossly inflated charitable deductions for conservation easement. That's not. That's not. That's not. And then the last one: schemes with international elements, offshore accounts, and digital assets. Taxpayers attempt to conceal income in offshore banks, brokerage accounts, digital asset accounts, and nominee entities. Maltese individual retirement agreements misusing treaty. U.S. citizens or residents contribute to foreign individual retirement arrangements in Malta and other host countries. They then claim an exemption from U.S. income tax on gains and earnings from the foreign arrangement by improperly asserting that it is a pension fund. And in Puerto Rican and foreign captive insurance, U.S. business owners obtain a financial interest in a Puerto Rican or other foreign corporation, and they claim a deduction for insurance premiums paid to that fronting carrier corporation. These arrangements lack many of the attributes of legitimate insurance. All right, so there's a lot of stuff going on, right? Schemes, and more schemes. I'm gonna tell you why they are hitting these schemes, especially the things with Puerto Rico. And anything in Puerto Rico. Because people on the internet talking about what they're doing. Hey, do this. It's the truth. Y'all on social media and be like, I got this hack for you. Right? Or such and such told me about this hack. And that's where they're getting this idea from. Because it's low-hanging fruit. People telling them what they out here doing. Right? And what they're doing with insurance and how they flipping it and all this kind of stuff. We telling them. Just make sure it's done right. That's really all I can say is, y'all, if this sound like anything that you might be doing, make sure you got your documentation. Because if you ever audit it, you're going to have to justify the positions you and your tax professional took on that tax return. I'm surprised cost segregation is not on here. I'm surprised. Cost segregation is legal, but I'm surprised cost segregation is not on a Dirty Dozen. I really am. Just because that's heavy on the internet too, on social media too. Do I foresee? I foresee in a couple years cost seg being one of the Dirty Dozen. It's if I'm not mistaken, it's been on the list before. But I'm surprised it's not on 2023 Dirty Dozen list. Let's look at the list again. Says, what's new and what's gone? Many items appear in a Dirty Dozen year after year, but they're usually new ones each year. New scams include fraudulent employee retention credit, social media, online account held for third parties, false fuel credit, and unscrupulous tax preparers. I'm surprised unscrupulous tax preparers is a new one because it's something that's been talked about a whole lot. Social media, bad advice, it's only going to get more prevalent. And this one, online account help from third parties. I told y'all, my whole face was like, go back and look. My whole face was like, what? Because I had never heard of that one. That's a new one. That is definitely a new one for me. ERC, I knew that was going to be on there when they started announcing it. The other ones I'm not surprised on. So those being new, that's interesting. Okay. The 2022 Dirty Dozen list. These are the items that were dropped. Pandemic-related scams. That's because we're coming more out of the pandemic. Unemployment fraud. That's because we came out of the pandemic. Fake employment offers posted on social media, and high-income individuals who fail to file. Why? Because they know people coming after them. We don't have as many non-filers as we might have used to have. That's because it's been advertised more and more, right? The fact that the IRS drops an item from the list does not mean it falls off their radar. Only so many items can fit on the list. It just means it's not in that top 12. You can find a link, um, links to the annual Dirty Dozen list going back to 2014. Some items on the Dirty Dozen list involve outright fraud, such as identity theft or using fake charities. Others involve tax credits or deductions that are actually in the code, such as conservation easements that can be legit, but are being abused. They're red flags for eye scrutiny and can result in aggressive enforcement. So that's why I'm saying some of these things are legit. The insurance stuff is legit. The stuff in Puerto Rico, that stuff is legit. It truly is legit. Just have your documentation to support how y'all came to your conclusion. For example, the IRS has audited hundreds of abusive syndicated conservation easement deals. When you see a new item on a Dirty Dozen, especially at the top, you know it's something the IRS is particularly interested in. ERC is a heavy one. I knew ERC was going to be heavy. I knew ERC was going to be heavy in 2021 because the way they were advertising it and people were dropping ship, and I seen a lot of stuff and people were asking me a lot of questions. So I knew in 2021, I was like, oh, this is going to be crazy. All right. The IRS urges the public to report abusive schemes on the Dirty Dozen. Report them. How you report them for 14242. Report suspected abusive tax promotions or preparers. Y'all, this means that if we out here as professionals doing something dirty, you can always report us. Like, really, you do have a right. Now you're gonna be left holding the bag to pay. But if you like, oh, I don't want to be the only one, like somebody else need to be punished, and somebody told me to do this, and I legitimately got evidence to support that, go on, write them up. 14 form 14242. I'm telling you, the auditor and me be having my documentation. So y'all don't play with me. Don't do it. Do not do it. This is why my organizer is as long as it is. This is why I ask as much questions as I do. This is why I have so much correspondence. Because if anybody asks me or I get reported for something, I'm be like, this is what we said. This is what was discussed. This is what I told them. And this is what they told me. The auditor and me won't stop, will stop. I'm just going to let y'all know she ain't going to stop. Because you're not going to come from my livelihood. And I don't charge go to jail prices. I just don't. It ain't worth it. It ain't worth it. I don't want you left with a bag. I don't want you to be trying to get me to help you pay a bag. I'm not going to do it. The tax cop, she ain't doing it. Her over here, total tax experience, my firm, we ain't doing it. We not for the foolishness. Y'all keep that foolishness somewhere else. Don't say I ain't told you. Because you heard it here. We don't play games like that. I'm not going to do it. It ain't worth it. Not when they got my fingerprints on file. It ain't worth it. Some of the Dirty Dozens are reportable transactions. The IRS designates certain types of transactions as reportable transactions. These include listed transactions and transactions of interest, right? So the fact that a transaction is included in a Dirty Dozen does not necessarily make it a listed transaction or transaction of interest. But 3 of the Dirty Dozen, 2023 Dirty Dozen, have been designated by the IRS. The conservation easements, the micro-captive insurance transactions, and the multi-personal retirement scheme. I'm telling you, some of those are 100% legit. Right? Don't be out here thinking all of it's bad. Taxpayers who participate in reportable transactions are supposed to disclose them to the IRS by filing Form 8886. Just disclose it. Failure to do subjects them to a penalty equal to 75% of the decrease in tax due to the transaction, up to $200,000 or $100,000 for a natural person. Who want to pay that much money when you don't have to? Just disclose it. Material advisors who promote or help implement such transactions must also disclose them to the IRS by filing Form 8918, Material Advisor Disclosure Statement. The penalty for non-disclosure of transactions of interest is $50,000. Who want to pay $50,000? Not I said the cat. Like, who want to do that? Just disclose it. Just this. That's why we ask these questions in our organizers. Just disclose it. Just disclose it. Some of it may be even, some might not even be taxable, but that doesn't mean that we're not supposed to report it. Some information is reportable, right? So I give you an example because it's going to be practical. Some of y'all are going to be like, this don't even apply to me. So when you do a rollover IRA or Roth or anything like that, right? You get a 1099-R and the code is G. Now that's not taxable, but it is reportable. Because when you don't report, they already know because they already sent them the information. They somebody even told on you, right? And then you get these underpayment penalties and all this kind of stuff that could have been avoided. So that's an example of reportable but not taxable. This is the same thing. Like, let's just disclose it. Disclose what you know because you can cover it. I'll have clients that have real estate clients that have more than one rental property. And so when we're qualifying them as real estate professionals because they are managing their own properties, what we do is we actually do a disclosure and say that based off of this section of the code, like all of their units qualify them. Not like we're not doing them separate individual, but based on this, it's the collective of all the activities for all units help them to get their 750 hours of qualification. So there's certain things that we disclose on a tax return to cover the taxpayer. Just disclose it. That's all I'm gonna say. Just disclose it. Because it'll save everybody headaches. Nobody want the correspondence later on. Dirty dozen treatment can result in larger tax penalties. Employing a strategy or scheme on a dirty dozen list not only makes an audit more likely, doesn't mean the audit's going to happen, but it just breaks you up higher on the audit list, but can also result in substantial tax penalties. And if an audit occurs and the IRS concludes that the taxes were underpaid due to the use of the strategy, the fact that the strategy was on a dirty dozen list can make it challenging to avoid the penalties imposed on taxpayers, tax preparers, and promoters. Everybody can get it. That's what they're saying. Everybody can get it. And I know as somebody whose fingerprints on file, I am not trying to get in trouble with them for no reason. So we're going to disclose it. I'm going to ask 11 questions. I'm going to ask them. I'm going to ask so y'all can see my face. I'm going to ask 11 questions. Yes, I am going to ask them 11 questions. And the reason why I'm asking 11 questions is because if something go down, I want to be able to defend our position. That way we ain't got to get ready because we already ready. Period, point blank. We want to be ready. And as I told y'all can report preparers. And we have penalties imposed on us. The IRS ordinarily imposes an accuracy-related penalty on taxpayers who underpay their taxes because they employed an abusive tax strategy. The penalty equals 20% of the portion of underpayment attributable to the taxpayer's negligence or disregard of rules. That's why I use the example of the 1099-R. Don't underreport it. You got a 20% for underreporting stuff, even though it's not taxable. Like, let's not do this. Taxpayers can avoid the accuracy-related penalty if they establish that they have reasonable cause for the underpayment and acted in good faith. But it's hard, if not impossible, for taxpayers to demonstrate that they acted in good faith when they adopt a strategy or scheme listed in the IRS Dirty Dozen. Doesn't mean they can't. It means it makes it more challenging. In one case, for example, a partnership utilized an aggressive tax avoidance strategy called Cobra, marketed by a Big Four accounting firm, to claim over $45 million in paper losses. The IRS disallowed the loss on the audit and imposed a 20% negligence penalty, which was affirmed on appeal. The court denied the partnership's claim that the court should remove the penalty because the partnership acted reasonably and in good faith and relied on the advice it received from its accountants and legal advice counsel. One big reason for the court's denial is the IRS had issued a notice alerting the public that the artificial losses of the Cobra scheme were not properly allowable for federal income tax purposes. This is the same type of warning the IRS makes about the abusive schemes in the Dirty Dozen. Y'all don't. So in other words, don't be playing. If they put it on the Dirty Dozen list, tiptoe around it. Tiptoe around it. Just don't. Penalties imposed on tax preparers. Tax preparers can also face civil penalties if they prepare a return with the understatement of tax due to a position they knew or should have known was unreasonable. Preparers found to violate this section face a penalty of the greater of $1,000 or 50% of the income derived by the preparer from the preparation of return. The IRS can increase the penalty to $5,000 or 75% of the income derived for willful conduct or reckless disregard of the rules. A position is unreasonable unless there is substantial authority for it. Like a taxpayer, a preparer will have difficulty convincing the IRS or courts that they had a reasonable basis for utilizing a tax strategy clearly labeled in the IRS Dirty Dozen list as a scam or abusive scam. In other words, it's what Bradford Tax telling us not to do. Don't do that stuff on them. Just don't do it. That's what they saying. Don't do the scam. If it's listed in the Dirty Dozen, they telling you back off. Go find something else. Go find another loophole. Go find another loophole. They already said the IRS, if it was on the list, the IRS not going to go for it. Now, I don't know if that's 100% true in all cases. Because if you can justify certain things and be like, I did not, you said it was this, but I did not do this, I did this, it's totally different. But they may want the easy way out. That's why you might be telling you, they want, hey, we ain't going to look, it's on our list. Then you playing with us. You ain't getting nothing, we disallowing it, we ain't going to have no talk, boom. And everybody on the same page. Because it's easy sometimes to do stuff like that. We put it on the list. You shouldn't have done it. You should go do something else. Okay? Don't make it fraudulent. I'm just going to tell you, just don't be out here doing fraudulent stuff in these streets. Penalties imposed on promoters. The IRS can always also impose penalties on promoters of abusive tax avoidance strategies, transactions, even if they do not prepare returns. Such promoters may include accounting firms, attorneys, and marketing companies. The penalty amount depends on whether there was a false or fraudulent statement about the tax benefits of the transaction. If so, the penalty equals 50% of the gross income from the activity by the promoter. Otherwise, the penalty is $1,000 for each activity. Y'all, if you feel like you've been done wrong and you rely on it, like go tell on somebody. But make sure you can back that up, because these people, we gonna come for y'all. If it's not, be like, wait a minute, I didn't tell that person that, I didn't do this. This is why I recap meetings that I have with people, and I send them videos and stuff. Be like, that's not what I told you to do. Let's, because I'm not out here. Like I told y'all, the tax cop tiptoe on the line. She ain't crossing the line because it ain't worth it. And what they also telling you is, depending on who it is, it's not just money. It's not just fines. People go to jail, and I'm not trying to go to jail. I told you I don't charge go to jail prices. All right, so we can wrap this up for this week. Our takeaways. Every year, the IRS issues a Dirty Dozen list. Get familiar with it, okay? The tax strategies on a Dirty Dozen list are subject to scrutiny by the IRS. Stay away from them, right? Some of the strategies on the list are reportable transactions that are supposed to be disclosed to the IRS by taxpayers, tax preparers, and promoters. Disclose them jokers. Employing a strategy on the Dirty Dozen can also result in tax penalties if the IRS concludes that the taxes were underpaid due to the use of a scheme. Notice that they say scheme. And notice that they're telling you what the schemes are and how they're looking at them as being schemes. If you legitimately are doing stuff the right way, that doesn't mean that conservation easements can't be taken. That means don't take more than your fair share. It's not saying that you can't do stuff with insurance. It's saying don't violate this stuff right here because, hey, we are aware that y'all out here doing this stuff. It's not saying don't go out there and go have a business legitimately operating in Puerto Rico or in the Maltese. It's not saying that. It's saying that, hey, we understand that y'all are doing stuff to avoid taxes, and don't think we don't know that y'all out here doing them. Do not do the avoidance things. Do not do the schemes. Do the legitimate stuff. Because we got legal loopholes all through the code for you to do. Get with somebody who will allow you to use a legal loophole and you can leverage it. But the stuff we told you don't do that joint. Just don't do it. Don't do it. All right? Y'all, I thank y'all for listening to me rant and rave. Hopefully, Bradford Tax Institute's Dirty Dozen list was worth you even listening to, right? And even my commentary on it. Uh, be aware of it. Go to the IRS. Just do IRS 2023 Dirty Dozen. Look it up. See what applies. We early in the tax season. Don't do it. Just don't. Don't do it. Don't do it. And if you do owe and you have issues and problems and you owe for multiple years and you feel like it's on your back, go find either an enrolled agent such as myself, a CPA, or an attorney, a tax attorney that works in the field of resolution to help you solve your problem. Everybody don't qualify for offer and compromise, but know that it's people like myself out here who are really here to help educate you and figure out what is the best remedy for you based on your situation. Y'all gonna have to cough up some of that information, your financial information. You got to tell the truth. And if somebody tell you you owe and you knew you owed and there's a financial hardship, work with somebody to help you get with the state and the IRS to be like, hey, this is too much pressure on me right now. I need some relief for a time period. Help me figure out a remedy that exists. Because they do exist. They truly do. I don't want anybody who listens to my podcast or is affiliated with anybody who listens to my podcast to be out here finding themselves in a sticky situation that they thought was a good thing when it could be avoided. Underpayment penalties are not fun. And as y'all can see, unless you got a good reasonable cause, and just saying I didn't know is not a good reasonable cause, is not going to get you out of the situation. So I definitely want you to make good decisions in this arena because it's not one to be playing. That when stuff is assessed, it rides you at the federal level for 10 years. So you're going to incur interest and penalties. At the state level, that stuff don't go away. It doesn't. And I don't want you to be in situations where you are trying to acquire new things, do other stuff in your life, and this thing is hold over your head for no reason. I really don't. Or it could keep you from getting a job or a security clearance or things of that nature because that people have come to me for stuff like that as well. So you don't want to find yourself in situations like that when it could just be avoided. And if this is the first time you've heard about the Dirty Dozen, let me know. If it's not, let me know. If you're grateful for this type of information because you didn't know existed, like I said, it's a couple of things on here that I'm like, yo, they doing schemes like this. This is crazy. Definitely be aware of them. I look for the Dirty Dozen. I actually look forward to seeing who's on the list and what's not on the list and comparing to what I thought based off of what I'm seeing in the industry was going to show up versus what's taken off. Y'all just be careful out there. Be careful in these tax streets. Everybody does not mean you well, but most of us do. Most of us truly do. Most of us want to help you get out of your tax situation. Most of us want to make sure you get prepared a fair return. It's not just about getting you a high refund, and it never should be. Okay? If y'all have any more questions, topics, concerns, issues y'all want to discuss, let me know. And I look forward to y'all reaching out and tuning in to next week's episode. Talk to you soon.